1 in 3 adults has prediabetes. 1 in 3. That means it could be you, your football buddy, your football buddy, or you, your best man, your worst man, you, your dog walker, your cat jogger. While 1 in 3 adults has prediabetes, with early diagnosis, prediabetes can be reversed. Take the risk test at doihaveprediabetes.org. Brought to you by the Ad Council and its Prediabetes Awareness Partners.
Okay, men, time to be an all-star caregiver. Drive them to physical therapy, doctor's appointments, be there emotionally and physically. Don't give up. Don't ever give up.
Caregiving is tougher than tough. Find care guides at aarp.org/caregiving. Brought to you by AARP and the Ad Council.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, we are streaming on YouTube. I am in the BTV5 studio. It is Jobs Friday, July 8th, 2022. And Tim, yep, we got the jobs report. And I feel like investors are not quite sure which way to go. Recession, no recession.
I mean, it's tough to be in a recession when you're, printing jobs reports like that each and every month.
Right? Like, can't you just see an economics class? Okay, now here's what typically happens in a recession. Wait a minute.
Exactly right, Carol. We're going to dive deep in on that. Is the Fed going to continue its aggressive fight against inflation? Probably. Well, not so good for stocks. And I think that's what has investors kind of wondering, okay, which direction are things going right now?
Yeah, a really good point. On jobs, we're going to talk to the president and CEO of the global staffing company, Kelly, Peter Quigley. He's got a staggering statistics when it comes to senior executives. You'll be surprised by this.
And we're talking market risks. The biggest one, we're going to hear from the president and CEO of American Century Investments on that.
And I feel like to some extent we've had some big leads, obviously the jobs report, but man, I gotta say the stunning, disturbing news about the shooting and death of former Japanese Prime Minister Shinzo Abe. He was a figure that I talked about very early in my career and a leader that, people looked to and came into Japan at a very critical time.
Yeah, real shock to the world when we're waking up to that this morning. We're gonna hear from somebody who was living in Japan years ago and reported on Shinzo Abe.
All right, we've also got a great way to wrap up what's been another busy week this summer of 2022. First up, though, let's get to the market drivers report. And let's get to some of the big news of the day in the market moving news. Yelena Shalecheva is senior U.S. economist at Bloomberg Economics in our Interactive Broker studio, along with Kriti Gupta, markets correspondent at Bloomberg. And Kriti, I'm going to get to Yelena in a moment to lay out the jobs data. Markets, though, I feel like just don't know where to go right now.
They don't know where to go. I will say, I think today is the kind of day where risk sentiment is very much affected by the passing of Shinzo Abe. Not to make light of it at all, but one of the things that a trader told me early on in my career was that sometimes the best undergraduate degree for trading is psychology, and sometimes that has a major effect. And I think that is the trade that you saw certainly in the pre-market. You certainly saw it overnight, and I think you're seeing a little bit of a damper today. Remember, we are looking at very light volume as well, but there is, even when you talk to traders on the floor, the ones that are at their desks, I should mention, there is this kind of somber tone in terms of even talking about issues that we've been talking about for ages: inflation, recession, the jobs number, et cetera. But it's really the passing of Shinzo Abe that I think has had an effect on how these markets are trading, to the point where it's always, you're even seeing kind of the go-to trade right now, which is sell treasuries, sell stocks, and that has been the trade that's been going on for 6 months straight.
And as you've reminded us all week, Kriti, look, volume is low right now, and we're down on the S&P 500 from a volume perspective more than 23% versus the last 20 days. So not a lot of activity during this holiday week. Yelena Shalecheva, senior U.S. economist from Bloomberg Economics, come on in here and talk a little bit about this jobs report, because that was a blockbuster report. 372,000 jobs added, blowing past the 265,000 that analysts on average forecast, according to Bloomberg Economics. There was some bad news, though, the participation rate ticking down. Give us your take.
Well, that was a little bit of a fly in the ointment, I would say. But overall, I think the report was pretty good, not just on the surface, but beneath. I think one thing I would like to highlight is the breadth of job creation, particularly in the service sector. So if you look at the diffusion index, this is one of the indicators that goes into our model for recession probabilities. That index is remaining really high. It increased in the months of June. It broadened further for the services sector, and that is telling us that more and more industries are hiring. So people find no difficulty finding a job, even if they lost one. So we all heard the news about layoffs in the tech sector and other industry that may be very interest rate sensitive, but people seem to be able to find jobs easily, even if they get laid off.
This is a good thing. All right. So, Yelena, what does this mean for something that Kriti focuses on day to day as she watches the markets? When investors are like, oh my God, we're freaked about recession. What does that mean for stocks? Oh no, wait, things are good. What does this mean for an aggressive Fed? So maybe I'm not so worried about recession, but I'm worried about valuations. How do you kind of make sense of it?
So I think, to me, this report clears the way for the Fed to remain on an aggressive tightening. So it makes even the CPI report next week less of an important report, because it just says, okay, the labor market is doing great, everything is fine for now.
It can withstand an aggressive Fed.
That is correct, even though we expect a quite significant increase in the headline CPI next week.
That's really, really interesting. Kriti, what do you think of that? The idea that because this jobs print was so strong, it shows that the labor market is so strong. There was the downward revision last month, we should note, but still the U.S. adding just hundreds of thousands of jobs per month, every single month through 2022. Does that indeed make the CPI report that we get next week less important because the Fed is kind of on its path and it is committed to fighting inflation?
Well, I think you have to talk about the recessionary dashboard here, which isn't signaling your traditional signals. You're not seeing these widespread layoffs. You're not seeing this big slowdown in business investment. I mean, sure, you're seeing kind of layoffs in pockets, Amazon, GameStop, et cetera, but it's still not at the level that you saw in 2008, for example, where everyone was getting laid off. My mom, by the way, was one of them at the time, and I remember it being this kind of this thing that almost took over. Almost everyone we knew there had some sort of job shakeup. This is, I think, different, and that's why you're seeing such a big range in terms of, is this a shallow recession that you really quickly jump out of, or is this a deep one? And that's why there's so much confusion about it.
Or is this a recession at all?
Or is this a recession at all? And I think that's a good point that you bring up, because our question of the day, by the way, on Bloomberg Television today was, what recession? We had a good ISM data. Sure, sentiment is low. Sure, everyone's talking about inflation, but look at the numbers. People are still spending.
So, Yelena, really quickly, 20 seconds. Do we get officially a recession, but it doesn't feel so bad?
I don't think we are going to get even a technical recession in terms of negative growth in the second quarter of this year. I think we get a positive reading, and we are not in a recession.
All right, well, there you have it. Guys, go have a glass of wine and a beer for the weekend. Things are all rosy.
Right now? Can we do that now?
We got a few hours to go. All right. Thank you so much, as always. Yelena Shalecheva. Check out her work on the Bloomberg Terminal. Senior U.S. economist at Bloomberg Economics, and follow all those hits that Kriti Gupta does, markets correspondent at Bloomberg. Really just setting us up for some of our discussions today, Tim.
Well, let's get to Washington, D.C. now for a check of the latest world and national news with Nancy Lyons. Hey there, Nance.
Thanks, Tim. President Biden is launching his sharpest attack yet on the Supreme Court's decision to eliminate the nationwide right to abortion. Speaking from the White House today, he called the ruling, quote, a horror, and said much of the country is experiencing, quote, a giant step backwards.
What we're witnessing wasn't a constitutional judgment. It was an exercise in raw political power.
The president signed an executive order that aims to protect access to abortions, but it will not restore the availability of abortion in states that have largely outlawed the procedure in recent weeks. U.S. employers added more jobs in June than forecast, and the unemployment rate held near a 5-decade low. Labor Secretary Marty Walsh spoke with Bloomberg right after the new numbers were released.
The couple things that I'm very happy to see in the private sector, we're seeing employment back to pre-pandemic levels. In the manufacturing sector, same thing. In the child care sector, for the first time, quite honestly, in a little bit, we've seen some gains, which means that our child care facilities are getting a little bit back to, I wouldn't call them back to where they were pre-pandemic, but we're seeing some growth there.
Walsh says he is happy to see some of the biggest wage growth is among the nation's poorest workers. A key presidential battleground state is putting new limits on absentee voting. The Wisconsin Supreme Court ruled today that absentee ballot drop boxes can only be placed in election offices, and no one other than the voter can return a ballot in person. The decision could have implications for the 2024 presidential race. President Biden defeated former President Trump in Wisconsin by just under 21,000 votes. In the 2020 election that year, more than 40% of ballots were cast by mail. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. All right, Tim, what goes up 15% yesterday and down 5% today?
All right, it's ticker GME. That's GameStop we're talking about. Shares tumbling today. This after the company fired its CFO and said that it's cutting jobs in a bid to turn around a business buffeted by shifting gaming demands and a market malaise.
All right, so you have got an MBA. You went to the Columbia Business School. So you've been asked back to teach a class about GameStop. What do you say?
Fundamentals don't matter.
I mean, right?
Throw everything you ever learned about fundamental analysis and, DCFs out the window because this one makes no sense.
Right? I mean, this is what this name is. Yes, they are trying to become something else because their old model doesn't make any sense, but it's been, retail investors have had some fun trading this one. We know they had, a big stock split, right?
Yep, 4-1.
So,
which is not a fundamental change, but some people do argue that it helps with options, so blah, blah, blah.
Right, and so it also gives a reason maybe to trade on it and stuff. So it's really interesting. The current chief accounting officer is going to take over as CFO effective immediately. They said this yesterday in a securities filing. Diane Jaget, I think it is. And I guess the past CFO not entitled to any severance payments beyond what is outlined in his offer letter from the company, according to the filing. But I mean, they're reducing staff, according to a memo that we've gotten here at Bloomberg. The cut's going to be felt across the parent company and Game Informer, an online magazine. I don't know. I don't even know what to say, where this company will be in 6 months.
Yeah, well, speaking of being in 6 months, later this month is when the stock split is actually going to happen, later in July. We should note that the reason why people who are bullish on the company are bullish on it is because of this turnaround, or supposed turnaround from Ryan Cohen, the guy behind Chewy, the online pet food and pet supplies company. They've hired some Amazon executives over the last few months. This is an effort to shift its focus from those physical storefronts to e-commerce, but we'll have to wait and see.
Yeah, exactly. Well, in the meantime, I'm just looking at the DES page on the Bloomberg, and about 22.5% of the outstanding float is shorted. So you can certainly get a strong view from investors on that one, at least institutional. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
I'm Courtney Donahoe from Bloomberg World Headquarters. The jobs report showed employment is still going strong, but this clears the way for the Federal Reserve to remain aggressive in its fight against inflation. Non-farm payrolls rose 372,000 last month. Well, we have seen stocks swinging between gains and losses all throughout the session. Now, little change across the board as we head to the closing bell. We check the markets for you every 15 minutes throughout the trading day on Bloomberg Radio, taking a look at the Dow. 31,399, the S&P at 3902, and the Nasdaq at 11,620. In other news, the Las Vegas Raiders has named the first black female president in NFL history. Sandra Douglas Morgan is taking on a top role at a team that's been dogged by controversy and turmoil in its senior ranks. And comedian Louis Black has turned angry rants into a career. Now, he's pretty mad at streaming giant Pandora. He claims the platform is airing his material without permission. Comedians say streaming services need to pay them in the same way songwriters are paid royalties, since they are the author of jokes. By the way, he's looking for $10 million. And that's a Bloomberg Business Flash. Carol and Tim?
Courtney, aren't we all looking for $10 million?
Yeah,
exactly. If I could get it, I'd take it.
I'll split it with the two of you. All right, Courtney, thank you so much. So, of course, the big story, certainly here in the United States, there's several, but really for us, front and center, and for investors, has been that monthly jobs report. U.S. employers, you know the news, adding more jobs in June than forecast. The unemployment rate holding near a 5-decade low. Signs of both strong demand and that tight labor market continuing. And Tim, we know that's going to help keep the Fed officials tilted toward another jumbo interest rate hike. They're going to be on their mission because it's about getting inflation down.
Yeah, my money's on 75, Carol, but I'm not a betting man, okay? I'm not a betting man.
Okay.
We love to talk to Peter Quigley, the president and CEO of Kelly. It's a global staffing solutions company, so they've got a really good idea of what's going on in the labor market, not just here in the U.S., but around the world. Peter joins us this afternoon on the phone from Harbor Springs, Michigan. Peter, how are you?
Good, Tim. How are you?
We're doing well, thanks. It's good to have you with us. So 372,000, just surpassing those Bloomberg estimates of 265,000 jobs gained for the month. What in here sticks out to you in this report?
Well, I think the fact that it is across the board job gains, all of the verticals did reasonably well, surpassed expectations in light of the fact that there is considerable concern about a recession. I think speaks to the strength of the U.S. labor market right now. If there's one downside, it was the slight downtick in the labor force participation rate. We need to get more people back into the workforce.
But a slight, really slight. And I know some of the analysis earlier on Bloomberg was like, yeah, we can kind of blow that off for the moment, because there are some people we know who've maybe just said, I'm done, I've retired, I'm not going to, come back into the labor force. Peter, how does the data points that you're seeing kind of fit with not only the monthly jobs report that we got today, but some of the other economic statistics about what's going on in the economy? Would you put your money, if you were a betting man, we know Tim isn't, would you put it on that a recession is going to come, or there's no way based on what you're seeing in this labor market?
Well, I think it's really tough, Carol, to see a recession when you have this kind of strength in the labor market. Of course, it could be a couple quarters away, but obviously the companies that Kelly deals with are still hiring. They're looking for workers. They have demand for their products, and they're looking for people to help support their transportation of goods or production of goods. So again, I'm not a betting man either, but I would say it's hard to reconcile immediate recession with the jobs market and the job report we heard today.
Peter, we love talking with you because you are seeing what companies are doing. Remind us of, you said kind of a broad swath of companies that you deal with. What kind of jobs, though? Is it mostly senior level that you're dealing with, or what?
We deal with from production workers, warehouse workers, office clerical, engineers, scientists. We're the largest provider of substitute teachers in the U.S. So we run the gamut, technology, both permanent placement as well as temporary. So we have a pretty good hand on the pulse of what's going on in the labor market.
Peter, are you seeing any sort of decline in demand for employees from the companies that you work with as the Fed has raised interest rates and as interest rates have gone up?
We've seen some softening in particular verticals. Technology has softened a little bit. I think life sciences, because they're catching their breath from 2 years of the pandemic, has slowed down a little bit. Really high-end permanent placement has tempered somewhat.
You're talking C-level stuff?
No, more director level roles that companies are hiring, or high volume of hiring when they're launching a new product. Kelly supports companies in their hiring. So there may be some softening, but we don't see a significant decline right now.
I tease this, so I want to get to it, because you guys have done a survey of more than 1,000 senior executives, and you found that the Great Resignation will extend into the highest levels of the C-suite. 72% of senior executives say they will leave their firms within the next 2 years. What's that about? Is that they're leaving for good, or because they've got a better opportunity?
I think this is a big surprise coming for a lot of companies, because executives at all levels are taking stock of what happened during the pandemic, whether it was working remotely or actually moving out of a particular location, not having to commute, being closer to family. And they realize that they have alternatives now that we're in a different environment. And it doesn't just impact your mid-level employees. We're going to see the Great Resignation impact C-level executives as well.
Peter, I've got a real meta question for you just in the last 45 seconds that we have. What about at your firm, at Kelly? What are you seeing with hiring your own full-time employees, your own part-time employees? What are you doing inside the company right now?
Well, we went to a remote work environment more than 6 years ago. We called it Kelly Anywhere, where we allowed people to work remotely to balance their life and their work. And it was highly adapted by our employees, and we were ready for the pandemic when it hit. But we think it pays dividends longer term for retaining our employees, because we recognize that it's not about building your life around work. It's about fitting work into your life.
Try that at your next review meeting, Tim.
Yeah, okay. I'll be doing it from the office.
but fitting work around your life.
Work is my life, and I love it.
I like those challenges, but I'm really trying to fit work around my life. Yeah, next. All right, we're going to continue. Lots more to come right here on Bloomberg Business Week. Carol Massar, Tim Stenovic. We are Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening and watching Bloomberg Business Week on this Friday. Tim, how do you feel about that BA5 variant?
I feel like it's as contagious as the scientists are saying. I feel like with the surge that we're all living through right now.
Don't you feel like we dodged it for so long and then not so much?
Yeah, you dodge until BA5. That's what happens.
All right, we're going to talk about that with Dr. Ian Lustbader over at NYU Langone in just a moment. In the meantime, back to your top business stories in Courtney Donahoe.
Well, good afternoon, Tim and Carol. We are up, we are down. I'm getting a little dizzy here. Stocks are fluctuating, now slightly higher. Today's jobs report reaffirming the strength of the economy, which may mean another supersized hike is on the way from the Federal Reserve at the end of the month. Well, we check the markets for you every 15 minutes throughout the trading day on Bloomberg Radio. The Dow up 50 points, 0.2% at 31,435. The S&P up 6 points, 0.2% at 3908. The Nasdaq up 24 points, 0.2%. Taking a look at NYMEX crude, 104.71 up 2%. The 10-year down 27 seconds at 3.09%. COMEX gold 1741.30 and the euro at 101.68. Your top business stories. Backstreet's back. All right. Well, for all of you who love 90s boy bands, Backstreet Boys coming out with a Christmas album. According to Billboard, it will be called A Very Backstreet Christmas. So across their 29-year career, the quintet has sold 130 million records. And that's a Bloomberg Business Flash. Carol and Tim?
I'm a sucker for Christmas albums. I don't care who does them.
It's July, Carol.
I know, but it's never too early to talk about Christmas.
You're right.
We got to talk a little bit about COVID. Remember, Tim, when among the most read stories on the Bloomberg, it was always the COVID summary and
the
latest
virus wrap that we were doing.
Right? Like for months on end, it was always about what's going on in COVID. It's a little bit different nowadays, and yet, as you and I know, over the last few weeks, it's still front and center. For
is it pandemic to endemic at this point? This is a conversation we've been looking forward to having. Dr. Ian Lustbader is clinical professor of medicine at NYU Langone's Medical Center. He joins us on the phone from New York City this afternoon. Dr. Lustbader, how are you?
Great. I hope you guys are feeling better. It's been running through the studio, I see.
Yeah, it has. You're absolutely right. Carol's in a separate room. She's gotten it twice, although I think she's actually gotten it 3 times. I'll let her spill the details. I'm wondering, though, how we should be thinking about this, because I got to tell you, even though it does seem like it's endemic in the sense that everybody's going to get it at some point, our reaction to it still feels kind of pandemic-y, in the sense of isolation for 10 days for kids under 5 who aren't vaccinated, for example.
Yeah, there's no question we're seeing a surge, and exactly as you said, BA5, it's about 50% of the cases that we're seeing, BA4 about 17%. These are kind of the latest Omicron variants, right, from BA1, which originated in South Africa. So, we're seeing viral mutations. Exactly as you say, we're seeing reinfections. So this virus not only spreads more easily, so more people are getting it, and they're a little less symptomatic. So they're really spreading it before they even feel very sick themselves. So it's a little harder to alert other people, because by the time you do a swab and you've been having a cough or runny nose, you've probably infected other people. There's also immune evasion. So people who've had either the vaccine or even had COVID are getting reinfections, and it's about 25% of cases are actually reinfections. So you can have it 2 or 3 times, like our good friend and co-host. So it's very frustrating. Obviously, and a lot of people say, what do? I feel sick. Should I test? If I do test and I'm positive, should I take Paxlovid? Should I, tough it out? Would that be better? So there are really lots of issues and lots of questions.
That was my case. I got it. I tested positive. I had aches, fever, really bad sore throat, took Paxlovid, and really within 24 hours felt a real big difference. The fever went away, but then I felt like I plateaued and just, felt yicky. And then I tested negative, came back to work for about 4 days, and then started getting symptoms again. This time it was all nasal and just wiped me out for 2 or 3 days solid, like in bed, and then trying to find my way back. I feel like Ian, that we just continue to not know about it. I didn't go to the hospital, fingers crossed, 2 vaccines, 2 boosters, so that's a good thing, right? I mean, but there's still, like,
yes,
it's going to hit us.
Yeah, unfortunately, as Tim says, it looks like we're evolving into a more endemic stage. And remember, coronaviruses, there are 4 or 5 and, multiple coronaviruses, and typically they've caused coughs and colds. And had we not known about COVID, you would have toughed this through and said, I have a virus, maybe a flu. Okay, it's similar, maybe not as bad. But now that we know to test, people are asking about Paxlovid. But your case is exactly right. First of all, we try not to give it to everybody, right? Because it is a somewhat limited resource. You can't treat everyone. And there may actually be some benefit to toughing it through and getting, a polyclonal response, kind of natural immunity, may give us an advantage in the future. But for people who are older, sicker, maybe have underlying problems, Paxlovid definitely inhibits the virus. So it slows it down. But when you stop after 5 days, many people will get a rebound. The virus hasn't been eliminated. It's just slowed down to give your body a chance to respond to it. So we do see that. And there's a real question, is that a real advantage? Maybe it's better just to ride it through. But what I would say is that for people who have underlying medical problems, and with HIV, COPD, lung disease, liver disease, cancer, diabetes, this is a big group, obesity, those people probably should get it, but if you're otherwise young and healthy, it's probably better to ride it out.
Dr. Lustbader, as soon as I'm going to ask you this question, I'm going to curse myself, I guess, because I'll probably get it. But I somehow have been in an apartment for the last, 10 days.
He feels like Superman right now.
With 2 people who have COVID, and I somehow have not gotten it. And I'm talking 2-bedroom apartment here in Brooklyn. What do we know about people who haven't gotten this?
So, great question. And we definitely see some people like that, people who are young and strong like you are. Either they've had other coronaviruses and have a little bit of immunity to kind of similar viruses, other coronaviruses, or they've had a very mild asymptomatic case. We've seen people where they come in, you test antibodies, they're positive. So either their vaccines have worked great, or they've had a very mild case, they didn't even know it, maybe a cough or sniffle for a day, didn't test themselves. So, and there are some other people whose immune system is very good. There's a lot we don't really know about all the details of this. And that's why some people get reinfected and why some people can be exposed and really not seem to get symptoms at all. A lot that we still have to learn.
Yeah. Wear masks. That's what I'm going to say. So Tim is young and strong, and I'm old and weak. Ian, you're not coming on anymore. You're done.
I did not say that exactly.
We love you anyway.
Call me anytime.
Really appreciate it. No, I feel like, there are no vagaries. And I'll tell you, in my case, I don't really have major underlying health, but I have a tendency to get sick and then be very sick for a long time.
Carol, you're good until BA6, okay?
That's just around the corner. What is that, fall? All right, let's get back to world and national news. Over to Nancy Lyons. She's in our D.C. newsroom. Hey, Nance.
Thanks, Carol. President Biden says the, quote, horror unleashed by the Supreme Court's decision to eliminate the nationwide right to abortion is already being felt across the country. Speaking from the White House today, the president signed an executive order intended to preserve access to the procedure.
When you read the decision, the court has made clear it will not protect the rights of women, period.
His executive order will codify efforts already taken by health officials following the Supreme Court's ruling, intended to provide resources for women seeking abortions, but it will not restore the availability of abortion in states that have largely outlawed the procedure. Well, the Labor Department says U.S. employers added 372,000 jobs in June, and the unemployment rate held at 3.6%, near a 5-decade low.
The strength of the jobs market was welcomed by Labor Secretary Marty Walsh in a Bloomberg interview.
We're seeing employment back to pre-pandemic levels in the manufacturing sectors. In the child care sector, we've seen some gains. The wage growth, we're seeing some of the biggest gain in the lowest income earners, which is good. Obviously, we're still dealing with inflation. The wage growth isn't quite keeping up with inflation, but I think what we want to do is actually bring inflation down.
Walsh said he's optimistic, as are the union and company leaders, that a new contract for West Coast ports will be negotiated without disruption. In Washington, Irv Chapman, Bloomberg Radio.
The U.S. Postal Service is increasing its prices this weekend, effective Sunday. First-class Forever stamps and the cost of sending a 1-ounce domestic letter will go from 58 cents to 60 cents. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much, Nancy Lyons, in our 99.1 newsroom in Washington, D.C. So, okay, if we take a look at sectors, best performing group, major industry group in the S&P 500 this year, Tim?
Is it still energy, Carol?
It is. It's up 28%.
Okay.
And everything else, the other 10...
Still is the key word, okay?
...are down. Still, exactly. Yet, if we look over the past week or so, and this is where we get to have fun on the Bloomberg, guess what's the worst performing group in the past 5 days?
All right. If I get this right, it's for all the marbles. Energy.
It is. The marbles
are mine. By the way, did you do the Bloomberg news quiz this week?
I did. You know, this is how I'm usually so well read in. I am so poorly read in because I've been sick.
You've been gone for 4 days.
I just kept getting wrong.
Did you hide your name in the rankings?
No.
I had to hide my name. It was so bad that I had to hide my name.
You were one of the... No, I'm out there for fully transparent.
Respect.
All right, so let's talk about energy, because energy stocks were the place to hide out this year. It seems like not anymore. Although I would say 1 week does not make a trade, so hold on, everybody.
Okay, well, look at the last month, Carol. The S&P 500 Energy Sector Index is down 18% since the start of last month. That compares to a 6% decline in the S&P 500. The stocks are even underperforming the 9% drop in West Texas Intermediate crude, so doing worse than the actual underlying oil.
All right, so it's following to some extent, what's going on in terms of the energy trade. And this story that's on the Bloomberg terminal by our Jeffrey Morgan says the troubling news has been coming in waves. Just this week, the U.S. Energy Information Administration released crude oil storage data that was negative for the oil complex, showing an unexpected build of 8.2 million barrels. This was in an MKM Partners note. Figures are bearish for crude over the longer term because they imply that the market is oversupplied. And, you know, the thing is, Tim, so many things at play. There's supply and there's demand. And this is why we're going to watch what's going on in the global economy, right, in terms of the drawdown on those oil supplies.
And China, a key part of the story, as the world's biggest importer of oil. So to what extent does a rebound in the country's economy lead to more oil being imported?
Yeah, exactly. I mean, there's a lot of things at play here. But yeah, definitely a different trade as of late, at least the short-term trade on energy. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
I'm Courtney Donahoe from Bloomberg World Headquarters. We inch closer to the bell, and stocks are now slightly higher. Employers hired many more workers last month than expected, despite worries about a possible recession. We check the markets for you every 15 minutes throughout the trading day on Bloomberg Radio. The Dow up 83 points, 0.3% at 31,467. The S&P up 10 points, 0.3%, 39,12. And the Nasdaq up 35 points, 0.3%. In other news, for a third time, Spirit Airlines has delayed a crucial shareholder vote so it can extend merger talks with Frontier and rival JetBlue. The vote had been set for today. It's now pushed off to July 15th, and that could signal that Spirit doesn't have the shareholder support to move ahead with the vote on an agreement it reached with Frontier. And gasoline prices just saw the biggest single-day drop in more than a decade, a welcome relief for drivers hoping for less of a heart attack filling up our cars. The national average has dropped to $4.72 a gallon, according to AAA. By the way, 13 states ringing in less than $4.50. And that's a Bloomberg Business Flash. Tim and Carol?
All right, Courtney, thank you so much. You are listening, watching Bloomberg Business Week on this Friday. Right now, we want to tell you about a story you'll find online at Bloomberg.com/businessweek, also on the Bloomberg terminal. It's about the fuel theft in Mexico. That's $1 billion problem, Again, although there might be a program that's behind it as well. And I have to say, Tim, this made me go and do some research because I remember back in 2019, a few years ago, there was another story that they wrote about, but it was a different type of fuel problem.
Yeah, this story written by Amy Stillman, energy reporter for Bloomberg News. Amy joins us this afternoon on the phone from Mexico City. Joel Weber is the editor of Bloomberg Business Week. He's with me in the Bloomberg Interactive Brokers studio. Joel, that story that Carol referenced is the gasoline that was being stolen, which AMLO, when he came to power, promised he would try to get that under control. But there's a new issue now, and that has to do with liquefied petroleum gas.
Yeah, so we actually covered the fuel theft previously, the theft of gasoline in Mexico, in our heist issue a couple years ago. What was really interesting to me here is that AMLO takes a lot of credit for cracking down on that. And Amy came to us with this reporting that was like, yeah, they've actually really... AMLO's been successful on the gas front, like the whole idea of tapping Pemex's pipelines throughout the country and stealing gas and this becoming a black market. That has gone away. But in its place, liquefied natural gas has become the problem that is now filling this void. And it's almost exactly the same as before. It's not as big of a problem yet, but the numbers have skyrocketed. And so, Amy, walk us through why this keeps happening in Mexico and what's different this time.
Great. Yes. Thank you very much. So essentially, that's correct. What we found through our reporting, and this involved going to some of the more dangerous places in Mexico where theft of fuel and different types of fuel, including gasoline and liquefied petroleum gas, LPG, is continuing, and spoke to residents in these places to try to understand how the market has changed since AMLO cracked down on fuel theft, which is known locally as huachicol. And, what we found was some interesting changes, not all entirely good. It's correct that, according to the official numbers, gasoline and diesel theft has fallen by, somewhere between 90 and 94% since from before AMLO got into power. And that's obviously a very big number, and it's a number that the president has been boasting about, for the past several years. It's arguably one of his, greatest victories in the fight against crime and corruption here in Mexico. But what we found when we went to these places is that LPG, which is it's a type of fuel that Mexicans use to heat water in their homes, they use for cooking, it's actually replacing the gasoline theft. This is especially the case in the state of Puebla, which is responsible for about 60% of the LPG theft that's currently going on. And what we found is that a lot of the thieves that were previously stealing gasoline, have replaced it with LPG. Why is this happening? One reason, very simply, is that AMLO has focused on gasoline theft, and what that means is that he's put in place military surveillance and to protect pipelines that carry gasoline. LPG arguably isn't getting the same treatment, so it's easier to tap the pipelines. They aren't being monitored as closely. Then the other argument is a bit more structural, which is to say that poverty remains a big problem in these areas, and so people don't really have a choice.
Okay, so a lot to unpack here. LPG being a different fuel, I'm curious, like it's not in the same pipeline, right? So, but if we've seen the government be able to actually protect the gasoline pipelines and crack down on the illegal trade there, why haven't they been able to crack down on the theft of LPG?
Well, this is a very good question, and one that the LPG associations that I've spoken to, are also asking. They want to know why AMLO isn't doing more to address this. One of the reasons is that it's a brand new market. It really popped up under his administration. And it could be the case that that the government will start to look at it and, if it continues to grow. Now, I think what's important here is that it remains somewhat small, you could say. I mean, it's 1/3 the size of the annual losses that Pemex had during the sort of gasoline theft before AMLO. So on the one hand, it's 1/3 as big, but the fact that it's grown that much in the past two to 3 years says a lot. So it's certainly something that they'll have to address.
Amy, big problem. And I always, stories like this, I'm always like, well, why is it happening? And it really gets to poverty issues, correct?
Yes, exactly. One of the issues with any of this theft is that this is occurring in zones in Mexico, where there are obviously large pipeline networks, but they run through sort of rural areas where there's really not a huge amount of income coming into these towns. There's not a lot of industry. And so, stealing fuel has been a practice that residents have been doing in these places for a really long time, to the point where, most of them don't even consider it to be a crime. It's sort of just considered like, what you do, you buy, you tap a Pemex pipeline and you sell it on the side of the street and people buy it. And it's just this sort of, local practice. And so, it's been this very complicated issue whereby, as poverty hasn't really been addressed, people don't see, an alternative. And one thing I just want to highlight, when I spoke to a lot of the residents, for instance, in the state of Hidalgo in central Mexico, what they told me is that why would they go and buy from a gasoline station when they can get it, half the price on the street, and that they can't really afford otherwise. A lot of these people are unemployed, or not really earning much, and obviously, hit by the pandemic and recession in Mexico, that hasn't really helped matters.
Well, it's another great story and an ongoing problem, but a different part of the energy world when it comes to Mexico. Amy, thank you so much. Amy Stillman, energy reporter at Bloomberg News, on the phone from Mexico City, along with Joel Weber, the editor of Bloomberg Business Week. He's in our Interactive Broker studio, along with Tim. And this is a story you'll find online at Bloomberg.com/businessweek and on the Bloomberg terminal. Be sure also, though, to check out the special double issue that is still out there, the heist issue. Lots of fun stories, certainly, heading into the weekend. All right, you're listening to Bloomberg Business Week. Carol Massar, Tim Stenovec. Coming up, we're going to head over to our TV colleagues, talk about the markets. We've been bouncing around on this Jobs Friday, see what's top of mind for me. I'm going to talk about one of the top performers over the past week or so. It's a name you'll know. You're listening and watching Bloomberg.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. 60 minutes left in your trading session, your trading week. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by our colleagues Carol Massa and Tim Stenemick. We come together across TV, radio, YouTube. And can I be predictable? Can I say that yes, we're a bit higher, but yes, volumes are really thin?
Yes, you can be, because that's certainly something, a story that we've been hearing a lot as of late. Rather than broad market, I'm just going to home in on one name in particular, and we're talking about Tesla. It is your fourth best performing stock in the S&P 500 over the past week, up about 12%. We got some good news over China overnight in terms of Chinese deliveries out of that Tesla factory there, and they hit a record. I just think it's interesting to see investors moving into it, and let's not forget, we're going to hear from Elon Musk in Sun Valley tomorrow, see what he has to say about that.
Is he going to ride in a Rivian, I wonder?
No, I don't think so.
Will he wear that white suit and pretend he's the robot?
Yeah.
Like, what is he going to do?
Is he giving a speech? What's he doing?
Is he going to bring his kids?
Yeah.
Well, we spoke to Ed Ludlow yesterday, and
Yeah.
he's speaking in this position, this space that's usually reserved for Warren Buffett. So
Yeah.
it'll be interesting to hear what he has to say, especially about Twitter, which we'll talk about a little later, though. But speaking of Mr. Musk, got to check in on crypto. Bitcoin higher by 15% this week. Can you believe it? It's actually going to be a winning week for Bitcoin. It's on track for its best week since October. We should note it's still down 60% so far this year, 70% from those November highs. But looking like a solid week for the crypto.
Looking like a solid correlation. 12%
Yeah.
higher on Tesla, 12% higher on Bitcoin.
Good point.
Meanwhile,
Nice.
let's have a look at 0.2% higher on the S&P on the day. Of course, overall, we are still down on year-to-date off by some 18%. If you look on a 5-day basis, well, we shouldn't really because, of course, it was a shortened week, but we are higher on the week. S&P 500 up 0.2%. We're up on the NASDAQ to a similar degree, and on the Dow Jones Industrial Average. The only laggard up by just 0.1% is the Russell 2000, up 1.6 points, Taylor.
For the year, you're still looking at energy, the only sector in the green here, but on the day it looks a little bit more broader, though energy, of course, the second best performer. You're still up about 0.5%. Romain, you also have discretionary and financials up there as well, of course, coming off of a stronger maybe than expected jobs report on that big headline number. So down at the bottom, though, it's industrials and real estate and materials. So sort of a mixed bag here.
A mixed bag here. I think some of the optimism that we did get this week came out of the semiconductor space. Of course, you had Samsung earnings over there in Asia a couple of days ago, a 21% jump in revenue that surprised a lot of folks. And then we got Taiwan Semi overnight that showed a 40% jump in revenue. So bolstering the idea here that one of the more resilient areas of this economy, the semiconductor sector, might still actually have a little bit more room to run, something to keep an eye on as we move forward into the next couple of weeks and start to hear from some of the U.S.-based semiconductor makers. Moderna shares up about 2% here on the day. In fact, now up for a 7th straight day. This is the longest winning streak that we've seen for Moderna going back to September of 2019. Stock now something like 50% from that 52-week low, which it just hit last month here. And I want to point out real quickly what's been going on kind of in the packaging space. Crown Holdings down about 2%. Silgan also down a couple of percent. And a lot of this has to do with something that crossed the wire late last night involving Kaiser Aluminum and a force majeure, basically shutting down one of its main plants in Indiana, pretty much because it can't get its hands on a couple of the raw ingredients it needs, including magnesium. This is something that's been going on for a while. And we talked yesterday with Bloomberg reporter Joe Doe about how a lot of these factories are shutting down because of power prices. But this is the other side of the coin here, too. And it's having a lot of ripple effects. Like you said, you have a Kaiser Aluminum shut down, and then, well, that means the people that buy from Kaiser Aluminum, they now have to curtail their production, and you have these ripple effects. So the supply chain constraints, they're still out there, Carol.
So the demand is there, but no supply, right?
Yeah, exactly.
And this is the conundrum for the Federal Reserve, of course, because what can they really control? They can tamp down on demand, but they can't really control the supply side that, of course, is eating in and pushing up inflation. I'm looking there for what we got out of the jobs data earlier today. Of course, it came in strong. There is some weakness under the hood if you poke into what the downward revisions were like. But overall, we did see the market price in, well, another perhaps 10 bips or so in terms of the calculus for where we'll see the Federal Reserve rate go by the end of the year. It's still below its peak, but 348, another 10 basis points added in there overall, Carol.
Yeah, and that's a great chart to get us to some comments from John Williams, the president of the New York Federal Reserve. I mean, we've talked so much about the jobs report today, understandably so, but we know the Fed right now, their mission is getting inflation down. And John Williams spoke at an event at the University of Puerto Rico, and he said the main risk is embedding high inflation in the economy. Here's what he had to say.
You can't just look at the data and say, that tells me what to do. You have to take all that information and say, okay, we need to get inflation down. How do we both try to look at all the data and get the best approach to do that, but also manage risks. And the risk today is really inflation getting stuck too high, and we really need to make sure that that doesn't happen.
All right, and of course, that's the president of the New York Federal Reserve, John Williams, at an event in Puerto Rico. All right, so cue up CPI, right, for next week. And for me, I'm curious about what CPI has to say, but how it kind of measures up with what we start to hear when we get earnings and what CEO and their C-suite has to say about kind of the economic outlook.
Well, Yelena Shaleitova from Bloomberg Economics was on our program earlier, and she basically said, does next week's CPI even matter at this point? Because with this strong jobs report that we got today, the Fed is pretty clearly on a path to raise rates by 75 basis points, and the economy is strong enough to do that.
Indeed, economy is strong enough, but that headline number, and I think what's interesting to me, Romaine, is the divergence. You're still getting an acceleration of headline, but a deceleration of core. But of course, the Fed still can't discount sort of the food and the energy prices.
Yeah, I mean, it matters, I think, distinctly. And not only that CPI report, I thought it was interesting. Remember, they started this new report. It was back in 2020. The Fed's own sort of inflation metrics, basically, where they measure inflation expectations, that sort of common inflation expectations index. And so they sort of go out and they survey the business leaders, investors, the forecasters, and they come up with this idea of whether those inflation expectations are anchored. Now, remember, it's only a quarterly number, but it's a lot more thorough than those monthly CPI numbers. That last number was only 2% that they had for the first quarter. So you're going to see a big jump. But remember, Jay Powell specifically said that it was that index that was a huge factor in them deciding to go 75 basis points at that June meeting. So it'll be interesting to see what happens when that's released next Friday.
And so we all garner ourselves for a more hawkish Fed. We all therefore, the pendulum then swings immediately back to, oh my goodness, the Fed are going to go too hard, too fast, and then we're back to the recession concerns all over again. But it seems to be this ongoing snowball effect in the market.
Yeah, I mean, this is what plays out in the markets, right? Every data point, investors either we're concerned about a recession or we're not, ultimately. I have to say, I think it's interesting that we still continue to see a strong jobs market with this aggressive Fed. It does make me wonder, could we actually see a soft landing?
Well, Peter Quigley over at Kelly, the staffing firm, just telling us that he has a really, really difficult time seeing a recession when you see job prints like this. And he's got a great view of this, too. The companies that he works with all over the world, and mainly here in the U.S., they are still hiring at a robust rate.
And it must be said, too, I mean, there's still a lag effect that we have to do. I mean, we didn't really get the aggressiveness of the Fed until the middle of June. And, I think it's going to take a couple of months before we start to really see the effects of that.
Show of hands, sorry for radio. Recession, no recession, you guys?
A show of hands?
Yeah, do you think there's going to be a recession?
Yeah, I think we're already in one, and I think we're all talking ourselves into one.
All right, so two of us, Caroline and myself. It's the Carol that say. You abstain.
He's pleading the fifth.
He's voting by mail. All right, guys, we're going to be back. That's going to do it for now, our cross-platform coverage. We will be back in less than an hour's time on radio, on TV, on YouTube, 4 p.m. for our Beyond the Bell coverage. We're going to wrap up this trading day and this trading week.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, Tim Stenovic, you don't think we're going to get a recession?
I don't. I mean, look, eventually we're going to get a recession because recessions are a natural part of economic cycles.
Right. Why don't you think we're going to get it?
We can't always be in an expansion.
So do you think we get it next year?
2
years? 3 years? Like what?
If I knew the answer to that, Carol,
I know you wouldn't.
I would be a guest on this program. Okay, that's the deal.
With the Stenovic family office.
Exactly.
I look forward to that. Yeah, I don't know. I think I kind of agree with Caroline that we're already probably in one, and
I don't think so.
And that they will acknowledge that we were in a recession. And we'll be already out of it.
I don't think we're in one right now, and I don't think that because and that is a result of the labor numbers that we continue to see.
If Atlanta GDP now is correct, that would mean that.
But that's not
that's
not how the NBER defines a recession.
I'm just going to say, maybe it's going to be different this time around. I believe things can be different this time around. This is not the same economy that it was 50 years ago or 25 years ago.
Yeah, that's a really good point.
Right? I mean, it's different.
And it usually does this stuff. It acknowledges, 6 to 9 months after a recession actually occurs.
What we can do with this phone, right now I've got you on Zoom in my phone.
So we can see each other even though you're in a different studio.
I mean, just think about what you can do. I don't know.
So the video chat will save us from the recession? Is that what you're saying?
Yeah, exactly. Okay. No, I don't know, but I think about Alan Greenspan in years talking about productivity, and I don't know, it's just, maybe it is different this time around. All right, what isn't different is that the news flow just continues to come in this year, 2022. Let's get back to world and national news. Nancy Lyons, she's in D.C. Hey, Nance.
Thanks, Carol. Expressions of shock continue to pour in from around the world on the assassination of Shinzo Abe. The former Japanese prime minister was shot at a campaign event, allegedly by a military veteran with a homemade gun. President Biden says he was stunned, outraged, and deeply saddened by the news. And while speaking at the White House, he was asked how it might impact Japan.
Japan is a very, very stable ally, and I do not believe it's likely to have, but I don't know yet, likely to have any profound destabilizing impact on Japanese security or Japanese solidarity.
Biden today stopped by the Japanese embassy to sign the book of condolences. Bloomberg's Lisa Du reports violence like Abe's assassination is extremely rare in Japan.
Just last year, there were 10 incidents of gun violence in Japan, and only one resulted in someone passing away. That's just how rare it was, and and any violence related to politics was also virtually non-existent.
Again, Bloomberg's Lisa Du in Tokyo. The White House is reporting all jobs lost during the COVID pandemic have been recovered. The economy added 372,000 new jobs in June. That was way more than expected. Peter Quigley is CEO of Kelly Services and tells Bloomberg workers remain in the driver's seat.
Companies are still hiring. They're looking for workers. We'll probably see some tempering in the second half of the year, but there's clearly a mismatch between the recessionary fears and the labor markets.
Kelly Services CEO Peter Quigley. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Nancy Lyons in our 99.1 newsroom in Washington, D.C. Carol Masser, Tim Stenovic, live here on Bloomberg Business Week. So Bitcoin, you talked about this, Tim, and I think it was interesting that Caroline Hyde of our TV team noting the run-up in Bitcoin and how it was similar to what I had mentioned was the run-up in Tesla over the past week or so.
Yeah, well, correlation is something that Bitcoin is not supposed to be.
Right.
Because, or not supposed to have with things, because the idea is that it's an uncorrelated asset, but it's proven anything but. Right now, it is on track for its best week since October of 2021. It's up about 12% this week. Back then, in the week that ended October 10th of 2021, it was up 14.4% on the week. Look, it's a risk-on mood, at least when it comes to risk assets, but it's hard to explain fundamentals when it comes to cryptocurrency, specifically Bitcoin.
Okay, so Columbia Business School grad, you're teaching a class on Bitcoin.
Which, by the way, they started to teach after I graduated.
Wait, we're going to get into this with our upcoming guest here.
Corey Clipston from Swan Bitcoin is going to be joining us.
Because there's a fun story on the Bloomberg that just talks about, from the editors of Bloomberg Opinion, saying that kind of the carnage in crypto came at a good time. And basically they're saying it came before it was too entrenched within the financial system, so that the fallout wasn't felt so much.
$3 trillion down to $1 trillion. So we saw $2 trillion get erased, and I guess it could have been worse.
It could have been worse, right? If it was more, I guess, part of the establishment in terms of the financial system, if more investors were invested in it, right? We see as it becomes maybe an opportunity within 401ks. Like, you do think about how much, we talk about COVID, how much we know, how much we don't know. Don't you feel like there's still a lot we've got to figure out?
Oh, there absolutely is. And I wonder to what extent the route that we've seen over the last 6 months, 7, 8 months is going to hurt the idea of this becoming something that people are actually putting in their portfolios. Not just a small number of people, but a large number of people like do with stocks and bonds.
Do you feel like it comes out, though, on the other side better, quickly?
I don't know. Family Office doesn't know yet.
Stenovic Family Office, TBD. All right, you're listening to Bloomberg Radio. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Courtney Donahoe from Bloomberg World Headquarters. Nearly 400,000 jobs added in a month and an unemployment rate near a 50-year low. This definitely complicates the Federal Reserve's battle against inflation. Stocks have fluctuated between gains and losses. We're less than 45 minutes to the bell with stocks on the rise, and we check the markets for you every 15 minutes throughout the trading day on Bloomberg Radio. The Dow up 69 points, 0.2% at 31,453. The S&P up 8 points, 0.2% at 3910. And the Nasdaq up 24 points, 0.2%. In other news, state pension funds have been battered with surging inflation and growing fears of a recession. Wilshire advisors say state retirement have assets sufficient to cover 70% of promised benefits. That's down from over 81% in the prior quarter. And you all remember the song from the film Urban Cowboy 40 years ago, looking for love in all the wrong places. So what's the right place? It is Wichita, Kansas. You heard me right. According to Zillow, Wichita is the best metro area in the country for singles to find love. The real estate company says the city offers a great mix of available and affordable rental housing and home to a high share of singles. So get those plane tickets, folks. And that's a Bloomberg Business Flash. Carol and Tim?
Was that Deborah Winger and John Travolta?
Oh, yes. Oh, yes. Dancing away.
reaching back.
Yes.
All right, Courtney, thank you so much. So Bitcoin, as we've been talking about, on course for its best weekly gain since March, helped by return of risk appetite in the global markets more broadly. But we've got to remember, Tim, right? It has tumbled some 60% year to date, and we have seen a lot of carnage.
Yeah, some of that carnage includes Celsius. It includes what's happened at BlockFi in recent weeks. Of course, it's Three Arrows Capital Management and more. Really eager to chat with our next guest. Corey Clipston is CEO at Swan Bitcoin. It's a financial services platform that helps people buy Bitcoin. Corey joining us this afternoon from Los Angeles, California. Corey, how are you?
I'm well, Tim, and hi, Carol, and thanks to both of you for having me on again.
Corey, I got to give you credit where credit is due. We spoke about a month ago, and you called a lot of what we saw in terms of carnage over the last month. I'm wondering what you're seeing when you look out across the landscape here, and if there is going to be another shoe that drops here.
Yeah, I think what we're basically seeing is the unwind of a business model that never should have existed. And we've been calling it CeFi lending, as in centralized finance, supposedly juxtaposed with allegedly decentralized finance, questionable whether that actually exists in crypto. But these businesses like Celsius, BlockFi, Nexo, Abra, and there's more, obviously Vald just kind of went under last week as well, have benefited from being in this new space that hasn't been regulated according to the laws on the books. And what they've done is, without oversight and without any sort of rules, gathered retail investors and called them depositors, but in the fine print explaining that they're actually unsecured creditors. And so every user of Celsius actually loaned their money to Celsius in the promise of some return, and Celsius could do whatever they wanted with that money. And this doesn't happen in that way without insane levels of, guide rails and oversight and compliance, et cetera. You don't have Citadel going out there and promising 5% returns. We're a high yield savings account to retail depositors because that's the information asymmetry inherent in a relationship like that is just too much. You can't have hedge funds and prop trading desks going out there and recruiting deposits from retail investors.
Unless you have oversight and regulations, would you say?
Exactly, yeah. So this is something that I think was a short window in time. For the last couple of years, all these businesses exploded in assets under management and in valuation. And the entire reason that these types of businesses don't exist in traditional finance without tons of transparency and regulators looking into who they're lending out to, what they're actually doing with people's money, because these are essentially, they really are just banks. This is kind of like wildcat banking from back in the day. taking gambling with their users' money.
Corey, there's a great Bloomberg Opinion piece, at least I think it's great, written by the editors of Bloomberg Opinion, right? And the headline on it is "Giving Thanks for Crypto's Well-Timed Meltdown," and it says, "Rarely has a crisis been so well-timed. Crypto managed to boom and crash before it became too connected to the broader financial system." So I guess they would argue, I would argue, right? Like, to some extent, I'm glad to see kind of some of this stuff, carnage. I don't want anybody to be hurt.
It's too late for that, though, Carol. There have been a lot of people who've been hurt.
Well, and
not as many as could have been, though.
And maybe I don't know who it's the fault of. I mean, everybody was so quick to jump on the crypto bandwagon that like nothing could go wrong, and buyer beware as an investor, perhaps.
Yeah, I think that it is obviously extremely sad for those people that were suckered in by false marketing from some of these platforms. On the other hand, a lot of people were greedy and were chasing something and kind of knew, in their gut a bit that something was off if you're looking for 10% or 18% interest on a savings deposit, essentially, when the bank is offering you 0.5%. And it's not FDIC insured, and everyone on Bitcoin Twitter is warning you every day for the last 2 or 3 years that these things are risky and probably are cross-loaning to each other, and you don't know where the holes are, and you don't really know what they're doing with this money. And now, with this lawsuit coming out against Celsius, at least the allegations in the lawsuit that was filed yesterday, we find out that they were gathering user deposits, going and gambling with them, and also using those new user deposits to pay interest to the old ones, also known as a Ponzi scheme.
Corey, we only have about 40 seconds left here, but I'm wondering what this means for the ecosystem. Your company, Swan Bitcoin, it's a financial services platform. It helps automate purchasing Bitcoin. Do you worry that the carnage that we've seen over the past few months will affect interest in Bitcoin?
So broadly, this is wildly bullish for Bitcoin-only companies that don't rehypothecate user funds and don't take risks with their user funds. So it's been fantastic for us and for people coming over and joining Swan and everyone sort of getting interested in us. And obviously, it wipes out a massive business model that was competing in the Bitcoin on-ramp space with these risky yields, essentially, and kind of sucking a lot of the air out of the room for the last couple of years, and those competitors are essentially all gone. So it's been very good for us.
Hey, Corey, we'll have to certainly continue it. We've got to table it for now, but we look forward to having you back with us. Corey Clipson, he is Chief Executive Officer at Swan Bitcoin, on the phone from Los Angeles, California. You are listening and watching Bloomberg Business Week on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening and watching Bloomberg Business Week on this Friday. If I look at the most read stories on the Bloomberg, several are about what we're going to talk about, including a question, who shot Shinzo Abe and why? It's a question, Tim, we wouldn't have even thought about yesterday, but just hit us this morning with this news.
The world's certainly reeling from this tragedy. We're going to be speaking with Jody Schneider, political news director for Bloomberg TV and Radio, in just a minute. First, though, let's get a check on the markets. Courtney Donahoe is standing by. Hey, Courtney.
Well, good afternoon, Tim and Carol. It is Jobs Day on Wall Street. It's still going strong, just as the Federal Reserve is trying to cool the economy to tamp down inflation. Employers added 372,000 workers last month. And we check the markets for you every 15 minutes throughout the trading day on Bloomberg Radio. The Dow up 19 points, 0.1% at 31,405. The S&P up 2 points, 0.1% at 39.05. And the NASDAQ up 7 points, 0.1%. Taking a look at the 10-year, down 25-30 seconds at 3.09%. Weekly loss for oil after a choppy week in trading. Crude higher, 104.68. Prices have swung in a range of more than $16 this week. COMEX gold, 1741.90. The euro, 101.76. Now your top business stories. Elon Musk